So I just bought not one, not two, not three, but 11 sector ETFs. And in this video, we're going to talk about why I did that. The stock market, it's ripping. People are making money hand over fist right now, said every YouTuber exactly 1 year ago today. And now none of them want to talk about stocks. But guess what? I'm actually still buying. So today we're talking about how I just purchased 11 different sector ETFs, why I did it, why would someone want to do something like this? And I think you're going to want to stick around because this is going to be an interesting video. So first off, did you know there are 11 different sectors in the stock market? Now let's think about this real quick. Does every sector perform the same every year? So for example, you invest in the S&P 500. Are certain sectors going to do better than other sectors inside the S&P 500? Obviously, the answer is yes, but a lot of people don't really think about it like this. They don't really realize that. And look at this. If you invested right now, year to date, energy is the best sector. So you're up 31.8%. In 2021, you're up 54.6%. You also did a great job if you invested in energy in 2021. You did the best out of all the sectors. Now, on the flip side, let's go over to 2021. How was energy back then? Well, if you invested in energy, you pretty much hated your life because you were down negative 33.7%. It was the worst performing of all the different sectors. And look at information technology, up 43.9%. That is a giant difference in returns in just two different sectors, both inside the S&P 500. We can see that the average of the S&P 500 over the year was 18.4%. So here's what I'm doing. What I do is I take some of my money and some of it goes into something I called a tactical asset allocation where I recreate the stock market sectors. If that sounds kind of fancy, maybe if you think I'm trying to be too smart here, it's just like a fancy way of saying I'm trying to overweight certain sectors and underweight other sectors. I'm trying to be tactical. So what I do is I basically think about this like this. If you could have invested in all of the sectors that did better than the S&P 500 in a year, so far year to date, if you had just invested in financials, materials, industrials, healthcare, consumer, this one actually is consumer staples, utilities here, and then energy, well, you would be doing better than the S&P 500. Doesn't mean you're going to be positive, right? Because obviously some of these, like financials, were still down 18.7%, but they outperformed the S&P 500, which is what I'm trying to do every single year. That's my goal. That's my benchmark. I measure my success versus whether or not I can actually beat this thing, right? And it's hard. It's not easy. Most people can't do it, and I'm not always able to do it. Sometimes I don't do it. But in order to continue trying to do it, I am doing things like this. So to visualize kind of how I'm doing this, why I'm doing this is what I call the jack of all trades portfolio. This is how money flows into my investment accounts, basically. And I have Valmentum, 25% of the money I put in every single quarter goes into Valmentum, 25% goes into this thing. So this is the tactical market recreation using sector ETFs. Individual stocks, 35%, and miscellaneous strategies, 10%. Oh, and I can't forget the cash, okay? 5% cash. Now, this is what I'm trying to do. So I'm trying to accomplish. Do I do this to the T? I don't. This is the goal. So, it keeps me level-headed and helps me understand what I should be doing. Now, I can't always find the things I want to find. This is one of the easier ones, right? I have to figure out which sectors that I like, but that's also not that easy because there's a lot that goes into figuring out which sectors are good. You might have a sector that's good because you think it's fundamentally good. You might have a sector that you think is oversold, and so for that reason, maybe it's got a lower or higher historical PE ratio. So you go and you buy that sector because it's lower PE right now than it was over the past 5 years or something like that. So there's things that go into the different sectors and why you would find a different sector and like a different sector over another sector. So these are the sectors that I like, and these are the actual ETFs I use to decide which sectors I like. By the way, if you want to know which sectors I like, which sector ETFs I like, then I have all these videos. Each video for each sector where I figure out which sector ETF I like the most for that sector. So you know what? Go ahead and take a look at all these different videos if you want to. It'll be in the description below. It's a playlist. And so what we're looking at here is the different sectors that I've liked over this year. So we started off in January of this year, and these were basically my sector picks with a percent allocation. Now when we talk about this, we have to remember the S&P 500 is made up of more, for example, technology stocks than it is, for example, utility stocks. So 29.2% of the sector weighting of the S&P 500 was technology. That was back when this year started. But today, it's actually lower. It's more like 27%, right? So as technology has done less good, it's performed worse than other sectors this year, so too have other sectors outperformed and taken over a little bit more of the pie in terms of the allocation of the S&P 500. Here we could just kind of visually see what it looks like. These are the different weightings in the pie chart, just so you can see it easier, maybe if you're more visual like that. So this is how much was in technology at the start of the year. Then you have healthcare as the next biggest. Then you have consumer discretionary, financials, communication, industrials, and like utilities is like 2% of the entire S&P 500. So there's not a lot of utility stocks. And so I do is I say, okay, which sectors do I want to overweight versus the S&P 500? It's not always like I'm going to put more of my portfolio in it. It's I'm putting more than the S&P 500 has inside of these different ETFs. So for example, technology, I equally weighted technology, 29.2% when the year started. I put 29.2% when the year started. Now, really, when the year started, everyone still liked tech stocks pretty much, and they thought the tech sector was going to do good, and I think people thought it was kind of crazy. But I thought that the sector was overvalued, so I went equal weight. And I was too scared to go underweight, which is what I thought would probably be more logical to do. But at the same time, like the tech sectors had been doing so well for so long, why would you bet against it, right? So it can be hard psychologically to actually do these things sometimes. So with VGT, by the way, is the sector ETF that I like the most for the tech sector. And then, so by August 2022, I put this at 26.8% and then 27% now in October of 2022. This is equally weighting the sector ETF, the S&P 500, equally weighting what they have in the tech sector right now. In terms of healthcare, so FHLC is the ETF I like. We had 13.3% back in January. Now I have 20%. So I'm going a bit more into healthcare now. I like healthcare more than I did back then. I'm actually giving it more of a weight in my portfolio. Consumer discretionary, 12.5% back then. I actually went down to 2%. So I'm not liking consumer discretionary right now. Not a fan of that sector, so I do not want much of my money in that sector. FDIS is the ETF I use for that. Financials next. So we have RYF, 10.7%, and then I have 11% in financials. So I'm actually equally weighting, I believe, financials, which I'll show you which one I'm equally weighting and not next. But next we have communication. I have FCOM as the ETF. I got 10% in that, so pretty much has been the same. Industrial, 7.8%. 7% is what it was, so pretty much equally weighting probably on that one. Consumer staples, 5.9% is the S&P 500. I had 5.9% when I started this. I still have 6%, so about the same. Real estate, XLRE is the ETF I'm using on this one. We got 2.8%, so not much real estate exposure inside the S&P 500, but here I have 0%. I don't like real estate right now, so you could say I'm definitely underweight real estate. I don't like what's going on in the real estate market. I don't like interest rates rising and what's happening with property prices and what that's going to end up doing to home builders and REITs and things like that. So I'm not a fan of that sector. Energy I do like. If you've watched my channel, I've done a lot of energy videos, and I have put some money into XLE. And XLE, I was equally weighted XLE in January, and then I had August of 2022, I had overweighting it, and then I'm overweighting it still a bit here now. Materials, we have 2.6%. I had 4% in August. I have 8% now. Materials is my favorite sector right now. I think it is oversold, essentially, based on the fundamentals and the historic PE ratio. I think that it should be a bit more than it is right now. So I like materials. Utilities, I had 2.5 in it. I went to 3.10, then 3% in October 2022. To help you kind of see this visually, what's going on with my allocation versus the S&P 500, you can see here I have the light yellow is what my allocation is versus the S&P 500's allocation. So take a look at this if you want to. Just another visual way to kind of look at this. So let's move on and see my overweight, underweight right now for September 2022, October we'll call it right now. So basically I bought these stocks, or I put money into these sector ETFs on the 28th of September of 2022. So I'm overweight FHLC, healthcare, overweight energy, overweight materials, overweight communications, and I have equally weight tech, financials, industrials, consumer staples, and utilities. And then we have FDIS, so we have consumer discretionary underweight and real estate underweight. So these are the ETFs that I bought so far, 11 of the different sector ETFs I put money into. I will be doing this quarterly. I'll do another video on this when I do it next quarter, and we'll see what happens. I mean, I'll tell you what I like for the sectors for 2023 in the video coming up, maybe in a couple months or something like that. But yeah, this is what I'm doing, and I'm hoping I can still beat the S&P 500 with this portfolio, and that's what I'm trying to do. So that's all I got for this. I hope you enjoyed it. Let me know if you got any questions below. If you're bullish on a sector or bearish on a sector that I am not, let me know. I'd love to hear from you, and watch another one of my videos, please, coming up on the end screen right now. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion, and let's face it, I am not right 100% of the time. So please do your own due diligence.